Hello everyone, welcome to the new series of Drishti IAS. I am Ritu and today's session is about Sensex and Nifty, and why we are discussing today's topic because Sensex has done something new which has broke the record and which has achieved for the first time, and this session is important for GS3 perspective. So the session title is Sensex breaches 75,000 mark for the first time, and it has done so in the last 3 years. So in the 2021 it was 50,000 and it has crossed the mark of 50,000, and in last 3 years it has crossed the mark of the 75,000. So this is the news. Then we are going to discuss the points of discussion. First of all, we are going to discuss the news, and then we'll have a market analysis that what the data shows, and then we'll have a brief introduction of Nifty and Sensex because these two things are very important for your examination. And after that, we'll have a practice question prelims. Before that, you have to like, share and subscribe to the Drishti IAS channel. Moving towards the news part. So we already had discussed that Sensex, the benchmark Sensex crossed the 75,000 mark for the first time, and Nifty 50 has also opened on a high notch, and it has also recorded high of 22,700 mark on Tuesday, and which shows that Q4 corporate earning, and it also shows the optimism towards the Q4 earning because it has already ended in March. So it shows that the overall year maybe the average would be good because we started on a high notch. So this is the news. Then coming to the what the data shows about that. So this is the market analysis, and we'll also discuss that why we have this record breaking figure. But first of all, we'll look for the data. So the BSE Bombay Stock Exchange opened at a fresh high of 75,124.28, and Nifty 50 opened at 22,765.1, and it is 382 points here, and so this is the more than 0.5%. so this is the data. And the market capitalization or the total value of listed shares of the BSE listed firms to 401 lakh crore to the Tuesday morning. And so this is the data, and what these data shows that we have gained the optimism towards the stock indexes. And why these kind of optimism is showing? So first reason is that US Federal Reserve, and it has got the stability, and overall the world economic condition has got the stability, so its impact is also showing on the Indian market and the stock indexes of the India. So the first is US Federal Reserve. And then coming to the second one is that before election, because this is the pre-election phase of India, and as you already know that on 19th April onwards, the country is going to witness election. So in pre-election phases, we can see that market condition on a high records or on a high note. So this can be also one of the reasons that Sensex and Nifty had started on a high note. So the pre-election is also one of the reason because people like to invest into this, because after election might be the result will show negativity and the investor will not interested in investing. So that's why the investments and any kind of mutual funds and any kind of things started increasing in pre-election period. And then we have the lower down or stability in Russia-Ukraine war. Though yesterday we had discussed about that there was an attack on nuclear power plant of Ukraine, but when we compare to 1.5 years back, it has achieved a stability, and not what we can say the stability, but it has slowed down and the frequency of the war has slowed down. So this has also created a positive in the Bombay Stock Exchange environment and also the National Stock Exchange environment and overall the stock indexes of the world also. So the Russia-Ukraine war is also one of the reason. And then we have the Israel-Palestine war. So that had also gained and that had also lowered down its frequency, and recently what we have seen that from Gaza belt and from the Gaza war zone, the Israel has stripped out and let down its military for the few of the amount and for the few numbers of the military. So this is also one of the reasons that we have achieved these kind of the stability in the market, and the market is showing the boom condition. So these are the reasons that we can see the good figure in terms of the stock exchanges. Then coming to the next one is about the stock index. So what is the stock index? So stock index is a carefully curated list of the companies listed on the exchange, and the companies that features the index usually span across the multiple sectors industry. It means that stock exchanges does not consist a company from a particular genre. They list company from different genre, and it shows the market conditions because that has a variety of the companies and the companies are doing in which conditions. So in order to know the market capitalization, stock index is the key, and it shows that how market is going to be capitalized and what is the condition of the market. And it also shows the economic condition of India because different kinds of economic players are involved into it. So this is the brief about the stock index. Then coming to the what is Sensex? So Sensex is derived from the two word which is sensitive and one is the index, and from combining both two words it is called as Sensex. And who has coined this term? So it has been coined by a financial journalist, Deepak Mohni, and it is the benchmark of Bombay Stock Exchange, which was introduced in the year 1986, and it has the list of 30 companies and which have a good reputation, which have a good investment. So it has listed 30 companies. So this is the brief about the Sensex. Coming to the Nifty. So Nifty is also similar to the Sensex, but here it is a benchmark of National Stock Exchange, not the Bombay Stock Exchange. It is the benchmark of National Stock Exchange, and it was introduced in the year 1996, and it has listed the 50 companies. So that's why it is called as the Nifty 50, and it also represents a large cap of company which generally have a good degree of liquidity and also trade in its stock exchanges. And it also shows the market condition, the liquidity in the market. So this is the brief about the Nifty. So here you should not confuse between the Sensex and Nifty. So Nifty lists 50 companies and Sensex lists 30 companies. So this is the basic difference you should know about the Sensex and Nifty. And Sensex is much older than the Nifty. So coming to the question part. So the question is, consider the following statement regarding the stock index. And the first statement is, it is a statistical source that measures the financial market fluctuations. And the second one is, it indicates the performance of a certain market segment or the market as a whole. And here they are asking for the correct statement. So you have to answer in the comment section. I hope you like this session. If you have any queries related to this session, kindly ask in the comment section. Keep studying for your examination. Thank you.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.